Good day, everybody. This is Mike Zuzolo with Global Commodities with your Tuesday, June 18th grain market update. It was a big day for bull spread profit taking as it turned out through Tuesday's close in both corn and beans, with July futures in both complexes losing some ground to the new crop markets after midday trade. With this trend continuing for the last half the session, July D's corn, that spread lost about 9% on Tuesday. The July Nove bean spread losing about 2%. One thing that might have come in and started to attract some of the more bullish new crop traders was the uncertainty in the weather. We had been going with the mindset that we were going to go warmer and drier as we progress the next 5 or 6 days. That was in the American models. However, the European model has consistently been wetter and cooler for the Western Corn Belt in particular. Well, on the midday Tuesday model, the GFS American model moved towards the European model, and I think that might have brought in a little bit more friendliness to the new crop futures. We still have tight nearby supplies for both cash corn and beans, and that continues to be a prominent feature to the trade. But I get the sense that between the weather and also the technical oscillators on those spreads, the speculative fund traders probably wanted to take some money out of both of those. The July D's corn spread earlier on Tuesday's trade had in fact gotten up to above 130 and tested last month's highs. Tuesday's grain trade also saw some important flat price technical levels being hit. 1290 in November beans, that was the report day low from last week. We got up to close to 725 in July. Kansas City wheat, that seems to be a psychological resistance right now. And it's interesting because some of the yield reports coming back in Oklahoma and the Texas Panhandle are coming back as not as good as some of the earlier reports, probably offsetting some of the harvest pressure. Most important to the trade, probably on the technical level, was September corn able to get back up above 584 and a half. That was the weekly high from last week before USDA's numbers. So we've actually seen that violated now, and it becomes support as we head into Wednesday. This is Mike Zuzolo. Remember, go to globalanalytics.biz for more information, and that there is substantial risk of loss in trading futures and options, and the impact of cycles or current events on prices may be already reflected in the futures. Have a good day, everybody.